Bitcoiners, welcome back to Fed Watch. I'm here with Ansel, and we have an awesome show lined up for you. Ansel has broken down a lot of stuff that's happening all across the globe with central banks. This one is going to be titled Central Bank Cluelessness, and we're going to also dive into the Bitcoin market. Bitcoin just smashed its all-time highs once again earlier this week, and we got a lot of analysis behind what's happening there. Ansel, before we get into all this, how are you feeling? How do you celebrate the all-time highs? I, for one, I ate a steak and got on Twitter Spaces and chatted up with some Bitcoiners. But how was your night last night? And how are things in general?
Oh, good. I don't have any special thing that I do for all-time highs other than I do text my one family member that also owns Bitcoin. So that's always a kind of a tradition. But no, I'm just getting back from Kansas City. I was at Bitcoin Day out there in Kansas City, and that event was awesome. So yeah, on Monday, just got home with the family and spent time. Didn't really watch the charts, honestly, until later in the day.
Yeah, so let's talk about Bitcoin Day. I mean, I'm a huge fan of what they are doing. I think this is their third or fourth Bitcoin Day that they've done, and this is a Bitcoin only conference that's really targeting smaller cities in the US and trying to do a really community oriented Bitcoin only awesome 1 day event. And they're teaming up with the local meetups. And I've been super impressed with everything they've did. The Kansas City event, had a lot of FOMO for not being there. It looked like it was a ton of fun. And I know they have one in Sacramento planned that I'm actually going to try to be at. So I guess tell us about Kansas City. I know you spoke at that. I want to hear about your talk. Get into all that.
Yeah, so Kansas is a very small event, just over 100 people. We got together the night prior for like just a social event, and then we had all day on Saturday of talks, and so that was really cool. The event space was really nice. They try to pick out the really event spaces that have something else going on where you can be a little bit active and have conversation with each other in the community rather than just speakers speaking at the crowd. They want a lot of interaction. They have lunch and good beers, and it was really fun. So yeah, I'm even thinking about possibly doing one down in Jacksonville where I live now. So and I was involved with the very first Bitcoin Day. This was an idea that myself and Edward came up with. He's still running this Bitcoin Day thing back in 2014 in Omaha. So we had the first Bitcoin Day then. It's a very similar concept, small town, small 100 or less people, just to really build a community there of Bitcoiners. And then they're still running with it. They did Omaha this year. They did Kansas City, Sacramento, perhaps Jacksonville. They're open to other cities. So if you guys are in meetups in maybe smaller markets, right, then you can contact Bitcoin Day at Bitcoin Day IO and possibly get a scheduled event in 2022.
Yeah, no, again, I think it's what they're doing is awesome. I think that there's this resurgence in local grassroots meetups, and I love what they're doing, integrating their kind of smaller 1 day events, much more like meetup, like almost like helping meetups do a super meetup, once a year in different cities. That's kind of like what it is. And I love it. I think it's awesome. And, I'm excited that Bitcoin Magazine was involved in this last one. What did you talk about in your talk? I'm curious about the topic and, how big the room was and all that good stuff.
Yeah, well, me, it's going to be a deflationary talk. So I did a kind of a credit cycle, a long-term credit cycle talk. And they also had me on the schedule for Bitcoin maximalism, which I didn't prepare for, but I went ahead and I just talked about for 5 or 10 minutes. My latest report, that my newsletter I do every Friday, I kind of summarized what I was going to say. And so I think we're going to go over that. No, we're not going to go over that one. We're going to go over another piece that I wrote yesterday on my website. But deflation, credit cycle, kind of blew people's minds a little bit, I think, because, the space is, I don't know if people are ready for it. It might not even have been a good talk for, Bitcoin 101, followed by Ansel Lindner talking about long-term credit cycle and deflation. It doesn't quite fit up, but there was a lot of questions. I think my presentation might have gotten the most questions from the audience. So yeah, it was a good time.
Well, I mean, I hope that a lot of the people in the audience who wanted to learn more subscribe to the show, because we talk about this all the time. And I have to give you a lot of credit. You've been a big part of just educating me and helping me kind of be a lot really ahead of the curve in a lot of what's happening in macro. So I really think everyone should be listening to more of Ansel and his opinion. And, a lot of people disagree with Ansel, and just understanding why people disagree with Ansel and where Ansel is coming from, and a lot of kind of his perspectives on macro, Bitcoin, the greater crypto economy. Like, dude, you've just been spot on so many things. So people should try to study what you're putting out, and I'm definitely trying to amplify that with this show.
Yeah, just question your assumptions. I think I think I trigger people because they don't want to question some of their assumptions that they formed way back when, and they need to update what they're thinking with current data. But
All right.
anyway, do you
Well,
want to get into the Fed news for this week?
yeah, let's get into it. And I also want to also tack on, talking about just the inflation narrative too at the end of Fed news. But let's get into it.
All right. So kind of the big news this week, a little bit, or the biggest news this week from the Fed was Governor Randal Quarles. He is obviously a member of the Federal Reserve Board, and he stepped down. He resigned. His term wasn't supposed to end for another 10 years, I believe, or 11 years. So this was kind of out of the blue, but and there was no controversy like the previous guys that stepped down earlier this year, from Kaplan and Rosengren. They were kind of in the middle of some trading scandal. But this guy, Randal Quarles, he just is stepping down because I think he's tired of getting bashed by the progressives. So he and Powell have both been taking heat from people like Senator Warren, Elizabeth Warren, and other progressives in Congress. And so I think he's just kind of tired of it. It also might be a chess move, moving a chess piece, because Brainerd was favored for his position, which is head of supervision. And I'm not exactly sure what that entails. I think it is something to do with the trading desk there for the New York Fed. But Brainerd was favored for that position. And then she kind of got in and started competing against Powell for his appointment as chairman. So perhaps Quarles is stepping down to make room for Brainerd to kind of leave Powell open for reappointment. I have a couple things here to share, or I just wanted to share my screen real quick if I could. Okay, so Powell, I just refreshed this. So Powell is sitting at 67%, Brainerd at 37. He's kind of been trailing off slightly, but still holding strong in where he has been for the last about 45 days. I think Powell is going to get a reappointment, and I think that's good in the respect that, he has been stiff arming CBDCs, which we have talked about. And I think he has some hawkish bone in his body where he's not going to just do all the easy monetary policy. So that's good that he's pushing back against some of these progressives and some of these other people that MMT type folks. So that's my update on this part of the Fed. Do you have any thoughts on that?
Yeah, I mean, it's interesting to dive in. I've never spent so much time, paying attention to the game of chess that's happening in Washington all the time. But yeah, I feel like I get politics more than I ever have really now. And it really is just an icky game, and I'm glad that Bitcoin is here to kind of eliminate any sort of discretion in monetary policy, and just, standardize this like we've standardized measurements and math and everything else that has helped us advance as a species.
Absolutely. Okay, moving on to the next thing is the Fed Stability Report. This is a biannual report that comes out every May and November, and that is strictly to kind of add transparency to the Federal Reserve's, I guess, their framework here. I'll read this. This is the Financial Stability Report description. This report summarizes the Federal Reserve Board's framework for assessing the resilience of the U.S. financial system and presents the board's current assessment. By publishing this report, the board intends to promote public understanding and increase transparency and accountability for the Federal Reserve's views on this topic. So two things kind of big in the headlines that came out of this. The first one is the Fed is warning about rising prices of risky assets. So this would be like stocks and even real estate, some places in the United States. So that's one thing that people have been pulling out of this assessment. But the thing that I thought was really interesting was they called out China and Evergrande, which we have been talking about for months now on the show. But they highlight the risk of the contagion over there from Evergrande. The Federal Reserve warned that fragility in China's commercial real estate sector would spread to the U.S. if it deteriorated dramatically as the sell-off across Chinese developers' dollar bonds hit higher quality borrowers. And I had something else I wanted to read. The Fed's stability report, which is meant to highlight risks that could undermine the financial system, said that, quote, financial stresses in China could strain global financial markets through a deterioration of risk sentiment, pose risks to global economic growth, and affect the United States. So they're calling out China here. I think this is very interesting. It's not that they are behind the eight ball too much here, because their warning came as holders of dollar notes sold by Evergrande unit Scenery Journey Limited had yet to receive payment for coupons that were officially due on Saturday. So Evergrande continues to miss these payments. And I had a chart here. You can see on this chart, these are all the US dollar bond payments that they have throughout the year. It says they need to repay some 7.4 billion in maturing bonds next year. So are they going to be able to do that? You know, this is just a rolling contagion that could get worse and worse. I still think there is something to this. I've tweeted recently about the demographic decline in China is going to make it so their real estate market just simply don't have the people to bounce back from this bubble. So it could get worse. And the Fed here is saying that there's contagion around the world, even into the United States. So we'll see how that goes. Usually, though, in the last 12 years since the great financial crisis, contagion usually doesn't come back towards the U.S. Contagion usually either starts in the U.S. or starts in Europe and affects Asia. But if it starts outside of the United States, usually that contagion doesn't affect the U.S. too much. But we will talk about energy here in a little bit. That could be a different part of the story. So do you have any comments on this idea of the stability report from the Fed?
I mean, I don't think I have anything super intelligent to add, but it's interesting to see. The Fed seems to always kind of, their reporting is a little bit later. All their activities is kind of delayed. I feel like people think that they're calculated, but personally, they might just be slow. I don't know. Like maybe, like you're saying, this Evergrande thing isn't going away. So we'll see how it all plays out. Again, we've been pointing out how there's a lot of things on fire, right? So Evergrande is just one of many fires, and we'll see what's next too, because I feel like these things are just going to continue to compound.
Yeah, so moving on to the next story of course, the Fed decided or announced their taper. That was not a surprise for us. They announced it after we recorded last week's show, but we were expecting it. So it wasn't top on the list here to talk about. But the U.S. Treasury's yield curve is still slightly inverted. I'm going to share my screen once again for everyone to see these charts. If you go to YouTube and find the Bitcoin Magazine's channel, and we have our episodes there and all the charts you can see. But so this blue line over here on the left is the yield curve, and right at the top, the 20 and the 30, it's still inverted only by 1 basis point, but that's significant. If you take a look at the prior years, so here's 2019, and the difference was over 10 basis points. And in 2020, the difference was over 20 basis points. So this is inverted still at the long end of the curve. curve, and that's significant. I also
So
wanted to
just to clarify to the listeners what inverted means. Effectively, what the chart is showing is that um, theoretically, bonds moving further into the future should yield more. And inverted means is that there is a bond that is pushed out. The 30-year bond is yielding less than bonds that are maturing sooner, which means that the yield curve is inverted, or it is, that's a signal that there's something wrong, because theoretically the future should pay, if you wait longer, you should get paid out more.
Correct. Yeah. And there's more inversions here. I talked about this last week as well. But this is the 5 and 10-year break evens. We are at an all-time high for inversion. And usually, as you can see here on the chart, the red line is the 10-year break even, and the blue line is the 5-year break even. So we should see, we want to see, in a healthy sort of economy, we want to see the 10-year above the 5-year relatively significantly too. We don't want to see them like a couple basis points. You want to see a bigger spread. But right now, pretty much this entire year, they've been inverted, and the inversion is getting worse. I have another chart here that just shows the total inversion. Back in March, it got down at the inversion got to 25 basis points, and that was tying a record at the time. And now we have blown that out of the water. It touched as low as, I think it's 38 basis points of inversion. So something is wrong. We have two types of inversions going on, and that to me is significant. I also wanted to point out the US 10-year minus the US 2-year. This is the main headline. When you hear about yield curve inversion, this is what they're talking about most of the time, the 10-year and the 2-year. And as you can see, pretty much this entire year, it has trended back down. And so that means that the spread between those two rates is getting smaller, signaling a weakening of the recovery, or whatever you want to call it. I also wanted to point out on this chart, it looks a little bit like a shitcoin chart, because it runs up real quick, then it slowly grinds down, runs up real quick, slowly grinds down. And this could be another example of that. We could just see a squeezing of that spread on the yield curve, out through the entirety of 2022, and we'll have to see what happens. But I have a feeling there could be some sort of recession.
Ansel, this is not
coming soon.
This is not a cupping pattern. This is lower lows. Is that what you're saying?
Lower lows. No, it's not lower lows, because zero is inverted, if it goes below zero. So the inversion was really bad back here in before the great financial crisis. We touched barely inverted in right before like August of 2020. And we're significantly outside of the danger zone of going inverted, but it is decreasing, which to me signals tightening money and slowing economy.
Isn't it interesting that before the COVID crisis is when we touched on inversion?
Yeah, significantly before too. It was August of 2019, and that it was before the repo rumble. Remember, because the repo rumble was September. So it was before the
September and October was big.
Yeah. And it's very, very interesting. This gets into why I think sometimes I'm like, man, who's in control? Who is really in control of this market? Because some of these things, like the yield curve inversion, you want to say, no way that this could be a legitimate signal again and again and again. And every time it is. So we'll see. As the spread decreases, we'll see how the economy goes.
Scary stuff, man. Scary stuff. Maybe that's just the single signal right there, is that spread, and every time it hits inverted, shit is about to hit the fan.
Yo, what is going on, plebs? We're going to take a break from our programming to tell you about the resurrection of our print magazine, starting with the El Salvador issue. Starting this fall, Bitcoin Magazine will be available on newsstands nationwide and at retail stores such as Barnes and Noble. Don't want to get off your couch though? No problem. You can also go to store.bitcoinmagazine.com. So skip the line and get each issue shipped directly to your front door with our annual subscription. I'm talking 4 issues a year that contain exclusive interviews and profiles with leading Bitcoiners, actionable insights on the state of the market, breaking news and cultural trends, along with powerful photos and artwork from the best artists in the world. Subscribe today and get 21% off using code podcast at checkout. That's PODCAST podcast at checkout.
Yeah.
What's next, Ansel?
Yeah, we got CPI is tomorrow as we're recording this. So it's the day that this podcast will be released. Is CPI is coming out for October. I think it's going to be a bigger number than even we have seen. It could be as high as 6%, but I don't know. To me, like with all of the supply chain drama and all the bottlenecks going on, I would expect it to be 10%. As much as people have been hollering about all this stuff, but we're barely above where we were last month. So that's coming tomorrow. This affects the Bitcoin narrative possibly because we could see more and more people screaming about inflation. What's your hot take on the inflation narrative?
Well, I mean, I tend to agree with you, and I think Aaron Segal, who wrote a great piece on Bitcoin Magazine, the pitfalls of the inflation narrative, and I think we spoke about that on this podcast. And you speak about this all the time: is you want Bitcoiners to be right, and Bitcoin doesn't need inflation to be a better system. Bitcoin is just I was actually on a podcast yesterday recording with folks from South America who are working on RSK and Bitcoin down there. And, he said, Bitcoin is not a revolution. Bitcoin is evolution, right? So Bitcoin doesn't need inflation to evolve how we communicate value and store value and operate as a society. But with that being said, I find it really weird that people are embracing the quote unquote inflation narrative so hard when what is actually happening is severe supply chain disruption, right? Like prices are going up because severe supply chain disruption from political and COVID related measures. That's flat out. That is why prices are going up. So I find it very odd that they're all of a sudden blaming it on inflation, right? They're not blaming it on their measures. So I find that to be very odd. We know why prices are going up. It's because the whole supply chain is fucked, right? The entire thing, on every level of the supply chain, it is messed up. And that's painful. It's going to keep getting more painful.
Yeah, that's the problem with not defining inflation properly, right? Their idea of inflation is just price increases. So anytime any price goes up, it's inflation. And that, to me, that's maddening because like you say, how do you even pinpoint, you want to be right for the right reason. You don't want to be right for the wrong reason because then you can make mistakes on your investment and all that stuff. But I love that saying that this is an evolution because I think of the dollar system as we know it right now, dying. And, what happens at the end of life? I'm thinking of an EKG with the heart rate monitor, right? It's a flat line. And I think the economy is going to flatline. There's going to be no growth, no inflation. It's just going to be dead. And that's where Bitcoin, the only way you're going to get life back in the economy is you need to evolve to the next form of money. And I think that is going to be Bitcoin. So, yeah, beautiful thing.
Yeah, I mean, I think the stats already show that velocity of money is decreasing, productivity is decreasing. All of these things are flatlining. They're like the system is dead. It's on its last limbs. So I think Bitcoin already, you can see that's where the yield are. Those the hottest stocks are the mining stocks. Like that's pretty much the Bitcoin industry. Bitcoin is the number one asset. Crypto is the number one asset class, right? Whatever. So like that is where all the growth is. And it's not in anything that's kind of like this older system. The older system, we know the dynamic. It's pretty much assets go up, everything else is grinding down, services quality grinding down.
Yeah, I thought you brought up a velocity of money. I think that's a great point because if you look at the velocity of the dollar, it's continuing to crater. But if you look at the velocity of Bitcoin, BTC on-chain volume, it's going up dramatically. So, yeah, I think that's a very good comparison. Also, in my talk at the Kansas City Bitcoin Day, I pointed out that this interest rate fallacy, that high rates of interest follow high rates of growth and vice versa. Low interest rates follow from low rates of growth. And so we see the interest rates in the Bitcoin space. I mean, I haven't checked them recently, but there is high rates of interest just for lending out your Bitcoin relative to the traditional system. So if you just look at the interest rates, you know that Bitcoin is where the growth is because that's where interest rates are higher. And to get that interest rate, you need to buy Bitcoin first, then lend out the Bitcoin at a higher rate. So I think comparing the interest rates in the two traditional space and the Bitcoin space also shows you that Bitcoin is where the growth is. That is going to be the story.
Yeah, and who has been spot on this? I feel like it's been you. You've been pushing that narrative for the longest time, as far as I can tell. So that's absolutely going to be the differentiator. And I think we're seeing it in real time. We're seeing it in front of our eyes.
Absolutely. Okay, let's go on to the ECB real quick. I just have a couple updates on that because I don't want to forget our friends across the pond. I don't want to concentrate too much on the United States. But okay, so ECB, man, there's not as much news in the headlines, honestly, to report on here. But there is one thing. I'm going to share my screen again just so people can see my headlines here. Okay, so the ECB talked about Christine Lagarde, that's her name, is the president of the ECB, and she said that they are very unlikely to raise rates in 2022. I had some highlights on this page, but they disappeared for some reason. But I wanted to pull out the last paragraph here. This is by one of the members of the ECB from Spain. And he says, our assessment is that the current inflationary surge is mainly due to factors of a transitory nature. Remember, they have jumped on this transitory vocabulary after the Fed started this. But anyways, although these factors could show a higher degree of persistence than initially estimated, so that we expect to continue to see relatively higher rates of inflation in the coming months. But their inflation rates are lower than the United States. I'll just point that out. Other news from the Bank of Japan. They cannot get their inflation off of the floor still. They're still like under 1% inflation. And every week, it seems like the BoJ policymakers are coming out and they're just restating like, no, we are committed to getting inflation. We're trying to get inflation. We're trying to be as irresponsible as possible, but we just can't seem to get inflation. So that's the only new update from the BoJ. But talking about these two things here, I wanted to bring up this chart. So this is from Yardeni Research, and I'll of course link to this and show this in the show notes for everybody. But you can see that the just insane levels of quote unquote printing that the Bank of Japan has done and the ECB has done relative to the United States. And this chart is relative to GDP, so it's a little bit skewed, but just look at this. And if you were to map out this with inflation rates, it would be the exact opposite, right? So the BoJ is the lowest inflation rate, even though they've quote unquote printed the most total assets to GDP. The ECB would have the next lowest interest rate, and they have quote unquote printed the most, second most to the Bank of Japan. And then the Fed has the highest inflation rate, yet we have printed the least compared to GDP than any other major central bank. So I think that is very interesting. And I wanted to, I'll stop sharing here for a second. I wanted to challenge the listeners. Maybe we'll cut this out. I don't know, but it's kind of a rhetorical question. But if you guys are listening to the show and you tweet at me, the Bitcoin Magazine puts out a tweet every week for this show. If you quote that tweet and then answer this question with your best answer, I'll give away a copy of the Bitcoin dictionary to the best answer that I think is that answers this question. And that is, if the United States is supposed to be exporting inflation, why are the ECB and the BoJ's inflation rates so much lower than the US's when they have printed more money relative to GDP? So anyways, back to you, Christian. What do you think of all this comparisons here, all these comparisons?
Well, I definitely think you should tweet that challenge out when we tweet this out tomorrow, just to make it as easy as possible for people to respond. And I'm definitely going to blow that up. But, for the most part, I feel like I agree with you. I'm not an expert here. So like, it's difficult for me to give a super authoritative answer per se. But, I tend to agree that what we're seeing is really bad ways to measure and allocate capital. We're seeing that across the board. It's all centralized control. None of these central banks actually control these systems in the wild. And the more that they do, the more that they mess up, really. And it actually is just a huge weight. Just like I think we're seeing this with many things that the government intervenes in, is that they just are a huge weight on that area. And we're seeing that now with health and COVID. Like, what have they done? They've just put huge weights on everyone's life, everyone's health. So they're not helping with anything. And if you were to like take what you're experiencing in COVID and then apply that to literally everything else that the government touches, I think that you can probably draw that the end result is the same. It's deflation. It's a drag, right? So all this activity, the more activity that they do in the markets, it's just going to keep dragging down the market, is my opinion. And, I think that aligns with your thesis, and that aligns with the charts that you showed us.
Spot on. We're on the same wavelength. Where do you want to go next with this? Do you want to go down to the macro rundown I did?
Well, I mean, like, I guess, what do you like? Prices are going up in Europe too, right? Like, are there inflation narratives there, even though theoretically, like, they're not seeing any inflation? Like, what's the experience on the street for people in Japan and in Europe? And are you keeping track of that too?
Well, I haven't looked at the specific numbers, but in Japan, they are starting to notice inflation in energy and food and things of that nature. They're not isolated from the world's concerns completely, but their inflation rate's very low. Even with those things counted, I would say it's probably less than 1% inflation. But for somebody, a country that's used to around 1% is noticeable. For the ECB, they have, I believe it was 3.6% inflation in September. I haven't seen the update for October yet. I don't know if it is out, but they are noticing inflation as well. And there is this I saw a headline for German citizens are starting to get upset with the ECB because they keep saying transitory inflation. And it's very similar to here in the US. A lot of segments of the market are, making fun of the Fed or making fun of people that will say, yeah, this is transitory. And they still say that because it doesn't seem to be transitory right now. But remember, in these long, grand scheme of things, like I showed you the rate, the chart for the yield curve inversion, 10 minus 2. And that takes a long time to develop. I mean, it takes several years for that spread to decrease just maybe 2%. From 4% down to 2%, it takes 3 years. Well, during that time, the trend is still continuing, but it just takes a long time to get there. Now, transitory inflation could be 1 year, right? Well, what real inflation would be is year after year of 5 to 10% inflation, not just 6 months or 1 year of inflation and back down.
Unfortunately, that's what the developing world is experiencing. So I think prices are going up for everyone, but people in the developing world, they're the ones who are actually feeling inflation and monetary debasement, that is affecting them in a very, very real way.
Yeah. And the Arab Spring, have you talked about this on a recent podcast, by the way?
Don't think so.
No, okay, but yeah, the Arab Spring started really after the great financial crisis, and food inflation was hitting the world. And right now we see food inflation again and energy inflation. Now, a lot of the emerging markets tend to be around in warmer climates. And so I don't know if they would be hurt all that much by high heating costs and stuff like Europe is going to be, and the US might be, and China too. But that is kind of scary when you think about, okay, so the Arab Spring started because of rising food prices, or at least that was a contributing factor. What will we see this time when we have surging food prices and surging energy prices?
And okay, here's something interesting about the surging energy prices. Are the energy prices because of inflation, or is it because energy is being sabotaged across the globe in the name of ESG? You know, energy facilities are being
Well,
decommissioned, nuclear facilities are being decommissioned. A lot of the oil and gas, whatever your opinion on like if they are long-term sustainable, they are being proactively taken down. Is that inflation, or is that, the supply chain being attacked, right? Because I feel like that's something that we've been pointing out for a long time. And I think that is a much more logical explanation for a lot of the price increases that people across the globe are experiencing.
well, yeah, and I mean they're just kind of slitting their own throat on that kind of stuff because uh, I think we both agree that the oil and petroleum products are the best form of energy. So they're just getting themselves deeper into a hole. I think it's also interesting that OPEC and the US are both curtailing their production. So the US now is right around 11.5 million barrels of oil every day. That's how much it's produced here. But prior to COVID, we were getting really close to 14 million barrels per day. So, and Biden has closed down the Keystone Pipeline. Now he's threatening to close down another pipeline in the north part of the country. And so it seems like if push comes to shove, the US could pump out 2 million more barrels of oil a day to meet global demand, and OPEC similarly. So it's almost like these companies don't want to produce this because they like the high prices. I mean, obviously they like to sell oil at $85 a barrel instead of $50 a barrel, right? So I don't know if it's so much shooting themselves in the foot with closing down nuclear power plants, or if it is also the kind of cabal that we see in energy production. So what are your thoughts on that?
I mean, again, I feel like this is where Bitcoin being proof of work and requiring energy is so, so important, because when you understand that energy certainty is something that is not part of the current incentive structure, you get very concerned, because we are all used to having energy certainty, and energy certainty and availability of energy is key to moving the masses forward. Maybe it's not key for keeping the elite comfortable, but it's key for moving the masses forward. And like that's what I am concerned about. So Bitcoin as being something that requires energy and incentivizes energy production is the opposite incentive to what we're experiencing now, which is a system, however you want to explain it, that decentralizes energy production. And I think that ultimately decentralizing energy production doesn't make the world greener, right? Producing energy in productive, efficient, logically consistent ways is how we, make the most of all the resources that we have at our disposal. And again, I think that Bitcoin aligns incentives there. And, we need Bitcoin, guys. Like we desperately need it, because our current governance set is pushing us into poverty by effectively pricing us out of energy.
Yeah, I think disincentivizing energy production is just a way. It's like I just picture in my head, walking into enslavement, because your economy is not going to do very well. Your neighbors that don't have these same crazy policies are going to do better than you, and you are going to be at the whim of neighbors. So take Russia's relationship with the EU right now. I mean, Russia owns the EU. If they want to cut off heating natural gas to the EU, they can. So that is, I mean, if you just, you are putting a shackle around your leg if you don't follow the proper economics on this, and that is not towards wind and solar, at least at this time, because it's just not sustainable, or it's not reliable enough.
I mean, and again, it's like, why no? I just don't understand why no nuclear, right? Like that it just, like, that is perplexing in and of itself, other than the fact that it's less profitable for the producers, right? You know, wind and solar is very profitable for the people who actually produce that stuff. I don't know.
Well,
But
wind and solar are profitable for the shovel makers, right?
exactly,
The people,
it's profitable, more profitable for the industry,
right? Well, yeah,
but it just makes less sense.
I was growing up in the 80s, I was always thinking that, oh, it's just a matter of time before we have mini reactors at each house and we have this decentralized grid. And no, I mean, that's nowhere near in the future.
Well, I mean, again, Bitcoiners are the only ones who are painting a future where that is even realistic again. So I think that Bitcoiners are the only people who are painting a beautiful vision of the future, right? Everyone else is painting dystopia, eating bugs, you'll own nothing, reducing. You are the carbon that they are trying to reduce in their image of the future. And I think, Bitcoiners have a much more wholesome vision, where again, the world is bountiful and it's a beautiful vision. So I think ultimately that's why Bitcoin wins, and we have the underlying economics to prove it, and we talk about that every day on this show. Do we want to talk about Bitcoin hitting all-time highs, and do we want to talk about some of the stuff that you talk about in your macro rundown, or should we just wrap this one here?
Well, I'll just plug the macro rundown. So if you guys go to bitcoinandmarkets.com, you can find a post that I did yesterday, and I cover oil and natural gas, the energy crisis, both in Europe and the US. I do it in chart format, so you can see the prices of different things, production forecast, like official forecasts of production, etc., like I was just talking about. I also cover the dollar in detail, and I compare the dollar to the Fed balance sheet in one chart, and that's really, really cool. So go check that out. And also, lastly, I wrap it up with shipping container rates. I look at the Baltic Dry Index as well as Freightos, which is the 40-foot containers, the famous, or the ones that from looking at the big container ships. They're sitting off of Long Beach there in California, all those containers. So the container rates for those specific things, and compare them to where they have been in the past, where they are now, and where I think they possibly are going in the future. So check out bitcoinandmarkets.com and the macro chart rundown.
Yeah, no, subscribe to Ansel's newsletter, guys. Some of the best information out there.
Yo, my fellow Bitcoin lovers, have I got something specifically curated for you. The Deep Dive is Bitcoin Magazine's premium markets intelligence newsletter. This isn't some pay group selling buy and sell signals. No, this is a premium Bitcoin analysis led by Dylan LeClaire and his team of analysts. They break down in an easily digestible way what is happening on chain, in the derivatives markets, and in the greater macro backdrop context for Bitcoin. This newsletter turns volatility into a joke. So hit up members.bitcoinmagazine.com and use promo code podcast for 30% off the deep dive. That's members.bitcoinmagazine.com, promo code podcast for 30% off. Divorce your paid group and learn why Bitcoin is the ultimate asset by Dylan and his team. My fellow plebs, the Bitcoin conference is back. Bitcoin 2022, April 6th through the 9th, is the ultimate pilgrimage for the Bitcoin ecosystem. The Bitcoin conference is the biggest event in all of Bitcoin and cryptocurrencies. We're leveling up and making this bigger and better than ever. I'm talking straight to the moon with the 4-day-long festival in the heart of Miami at the Miami Beach Convention Center. This has something for everyone. Whether you're a high-powered Bitcoin entrepreneur, a core developer, or a Bitcoin newbie, Bitcoin 2022 is the ultimate place for you to be with your people and celebrate and learn about the Bitcoin culture. So make sure to go to b.tc/conference to lock in your official tickets and use promo code Satoshi for 10% off. You want more off? Pay in Bitcoin and you'll receive $100 off general admission and $1,000 off Whale Pass. Those are stackable. So go to b.tc/conference and attend the best conference in Bitcoin history.
Yeah, I guess let's just talk about Bitcoin price. I feel like, we don't talk Bitcoin price that much on the show. We're both generally Bitcoin bulls. But not surprised. Again, I feel like these all-time highs, they're a little boring. And we were talking about this last week with Dylan, is that if you look on chain, like this is like accumulation right now. So we're accumulating at all-time highs on chain, and there's no sign. We're at the sign of the beginning of a parabolic move up, not at the end. So I think there's a lot more to go with Bitcoin. I think people who subscribe to the bull cycle, historic performance, typically will say that this is about the time where Bitcoin starts doing something and really making some headlines. But I guess, what are your takes here?
Yeah, well, I think I agree completely that consolidation at the top is what we're seeing. And there is no resistance above us, right? So technical analysts will look at the chart and they will find areas of, massive areas of selling or buying and support or resistance on the chart. And there's nothing, right? If you're at all-time highs, there's nothing above you. Now you have to start looking at the Fibonacci extensions and things of that nature. So yeah, it's very, very bullish. I don't like that we're hanging around just above the all-time high. Every day we seem to be going just another $100 or $1,000 above the all-time high. I would like to see a nice $5,000 day, and that would really solidify this breakout in my mind. But all bullish, and the fundamentals also show that. So the hash rate is going up. I think it went up 7.5% on the last difficulty adjustment, which is very significant, even considering there's, the chip shortage is still taking a toll. And also the on-chain, like I mentioned earlier, the on-chain volume is insane. Like there was something like 8 million Bitcoins transacted on-chain the other day. So that is a really good sign for velocity of Bitcoin moving around, and the fundamentals are solid. The price is
that's
solid.
like 2x the liquid
bullish.
supply. That's 2x
Yeah,
the liquid
well,
supply. So I mean, if the velocity is every Bitcoin gets used twice per day, that's liquid. Like that's much better than the dollar.
Yeah, I think it was 4 million, and then a week later it was 6 million, and then a week later after that it was 8 million or something. So it was pretty crazy.
Well, bull markets will do that, but at the same time, fees are incredibly cheap. How do you explain that, Ansel?
Whales, institutional buying. It's got to be some big money buying in.
So, I mean, is this just kind of a sign of Bitcoin is best for high value transactions, and as long as the value of the transactions are enormous, fees will be incredibly cheap?
Yeah, I think so. I think there obviously is going to be a dynamic, and I've been talking about this for years. There's going to be a dynamic between layer 2 and on-chain, because as we go forward in the future and fees become a more important part of the block reward, there is going to be a dynamic that develops for on-chain. And I think the fees will be much more expensive than today, but how much more expensive, I'm not sure. Yeah.
Yeah, I mean, two things I like to try to put things into perspective, at least my mentality on it. And I think I'm hyper bullish on the perspective of Bitcoin security. But one is, what percentage of global economic activity is happening on Bitcoin versus the traditional system? What do you think?
That's the question.
Yeah.
1% at this point, maybe 2.
Right. So, okay. So let's just be kind and say 2% is happening. So, I mean, what do you think on chain is going to look like when 95% or 100% of economic activity is settling onto Bitcoin? Like that's an exponential increase in economic activity. So, if Bitcoin succeeds, that is what that success looks like. So I think, we're going to see a very, very different fee dynamic. The second thing is, I personally think that fees and block reward denominated in sats are going to go down. Both fees and block reward, denominated in some sort of like real life buying power, are going to continue to skyrocket in value. And I think mining is going to be incredibly lucrative. So the breakdown between the fee market and the block reward, I don't really know what's going to dominate, right? I think that there's a lot of block rewards still being pumped out. And I just think that people just have a tough time with exponentials. And right now, my name on Twitter is 37 sats. That's the block reward in 100 years. And I personally think that that is going to be a dominant like incentive to mining Bitcoin in 100 years, is to get those 37 sats. So, we can go beyond Satoshis. We can continue to subtract or, fractionalize beyond that point. And, this shit is going to get wild, guys. Like, I think that we're very early still.
Well, I have a question. I'm not technical enough to know this answer, but, the fees to get your transaction in the next 24 hours has been sitting at 1 sat per virtual byte for a long time. Now, is that, can it be less than 1 sat per virtual byte?
I think with a soft fork, it can. And it already, I mean, in terms of like, you can go to millisatoshis on the Lightning Network too. So,
yeah. I'm just thinking if one Satoshi is the minimum fee per transaction, that's a pretty hefty fee in the future.
Yeah, if the block reward is only 37 sats, right? Yeah, no, I mean, again, if Bitcoin wins, I think it's literally a certainty that we're going to go past Satoshis. We're gonna subdivide past Satoshis, and who knows how big this thing gets if it truly is the underlying base infrastructure for all value transfer. I just feel like our human minds can't even grasp how the math works on that.
Yeah, I thought sub Satoshi would be a hard fork, but I think Bitcoin has to do a hard fork in the future, because isn't there like a 2038 bug or something like that? So in that hard fork, we can do the millisatoshis.
I've heard that it can be soft forked in, but I'll defer to you as more of the Bitcoin OG.
No, I'm no expert on that. No, I'm no expert on that.
All right. Well, hey, we'll have to get that answered ASAP, because that is pivotal to my theory that 37 sats is going to be more than enough to incentivize mining in the future. All right, Ansel, I think that this was a fun rip. Y'all, tell us how you thought of this podcast. Follow me at CK_snarks. Follow Ansel at Ansel Lindner. Find all of our stuff at Bitcoin Magazine and bitcoinmagazine.com.